Good day. Ira Epstein with your metals market wrap-up, and this is for Thursday, and we're at the 13th of February, 2020, just after 2:05 p.m. Remember, tomorrow's Valentine's Day. Mwah to everybody out there. All right. You know, the market took on a different character today. It's starting to think about the long three-day holiday. You can just watch what's going on, and you get that feel all about it. You were up moments ago, making the highs in the NASDAQ. You're suddenly getting big reversals in it. I don't think you want to put too much credence on anything right now, other than thinking about the fact that when you go home Friday night, the world markets are open. You're going to have 3 days of reports out of China on the COVID-R, which is the coronavirus. It's the formal name for it. You're going to hear about spreading of that virus in different cities. I'm hearing Hong Kong's going into a lockdown already. I think we have our 15th case of it in the U.S. and more cases. But the reality is the more cases they're giving you and not the same proportion of death means that you don't have the mortality rate as high as some of the earlier viruses. So that's the positive, not as many people dying. The terrible, of course, is the virus. There's other parts at work, though, here. People are starting to talk in the gold market. I was reading an article about it today, that at first the commodity markets get hit because China doesn't need the supplies. But then the world's tied together. The products we need to manufacture goods that come in, we're not getting. And that creates its own inflation on what's available still. And gee, if I have a product and I can get a few more bucks for it because they're not around, you start pushing the prices. Interesting article I was reading. And you know, this getting China back up and running, it's not going to be Tuesday morning. I hope you understand that. This is going to take a while. You've got the same problem in energies, and while they're getting a bump here, that's fine. But you know, tanker rates are coming down sharply. Where do you store the oil you can't use at this point in time? Do you want to keep them on an expensive tanker, a less expensive tanker? Eventually the product gets taken up, but it all takes a bit. I liked today that the copper market was up because I call it Dr. Copper. I kept telling you, if the auto plants are going to go, keep your eye on palladium. That's one of the trigger markets. Watch coffee. If people are walking or driving or going back to offices for the first time in a while, they might stop and have coffees. So you start looking at some of those different markets. Now, in the gold market, we're up for the week, and today we have one more day left, $3.90. But we've never backed off much from that top. That's the bigger story here. And admittedly, this is a close-only chart because I'm interested in getting rid of the noise from the highs and the lows. That's why I like charts like that. When we come to the charts, I told you that from this missile day, as I label it, this is the day that that Iran attacked our soldiers in Iraq. And by the way, 100 have been hurt. So it started off 15, then it went to 50. Now I hear it's 100 had concussion problems. But from that high to this low, all of in a 4 or 5 day period, we have stayed within that range this whole time. Now the market has changed its pattern today. It got up today and got through the last rally high. Let me back off this chart. Here, the pattern was lower highs, lower lows. See that? Now the pattern changed where you've got a higher high and higher lows. So just that fast, it switched gears on you, and until you take out 1564.40, the bulls grabbed control of the market in terms of the swing line. Where's the battleground? It's crystal clear. It's the 18-day average of closes, what I call the line in the sand. Where's the resistance in the market? The upper Bollinger Band. Can you get swings back and forth like this and get chopped in here? Probably. And if you get my morning video, I've been showing what that is because I put window envelopes on, and that helps you in the morning videos to understand another layer that they're not Bollinger Bands, but they're another popular layer that a lot of traders use. So I'm looking at this market that tonight going home, what, momentum? Not momentum, bias. Bias is up. Trend is up on the swing line. Momentum, flat, trying to turn up, hasn't really succeeded in it. You can see the visual picture. But going home, the bulls took control of the market. Whether they can keep it, that's what we're going to find out. The gold-silver ratio is back into a high area here of 89.5 and sort of running into some resistance. We'll see if it does anything from there. When it turns and you get it down under this, wherever that 18-day average is at that time, watch out, silver could take over on the gold. Has silver done that yet? No. We talked, would silver be able to get to the lower Bollinger Band? That's been one of the questions that I've had. It already was oversold yesterday at a reading under 30. That means you're oversold. And today what the market did is it's saying, no, I'm going to respect that 100-day average. So the resistance is between the 100-day and the 18-day average. Even if you get up and over 1782.5, because of this pattern, you have a lower low and you'd have a higher high. So I'm really not excited about silver. Copper market's done what I thought it would do, in the sense that we had an embedded reading. You lose it. When you lose it, unless you get it back right away, the odds favor that internally the market's changing on you. Now, we also had a crossover where the 18-day average got under the 100 and the market did not go for those lows. It just sort of hung in there, came back down. By the way, let me show you the embedded reading. Right here, you lose it. Next day, you gain it back. That's a warning sign. It's still bearish. Then it loses it. For me, that's game over. I've been in this game before. Trying to say, well, it's going to lose it and go back down, sucker play. Doesn't mean it can't happen, sucker play. The momentum's out of this market. The odds favor, I call it the line in the sand for a reason, the odds favor price and the 18-day average trying to come together. They worked on it yesterday, and bingo, today, you've got it. So going home, the bulls took over control. You'll say the bulls, higher lows. This high today took out this old high. So now you've got higher highs, higher lows. The close is over the 18-day average. Admittedly, get one bad word out of this COVID-R, the coronavirus, you could slip back. Get a good word where China says they're going to work, you may not look back here again, these lows. I still believe, and I said it yesterday, this could be a major low, a low we don't see for a very long time, challenged again. If you go up, let's give the if scenario. Next resistance, 268.50. If you break down and even take out 254, you'd have a higher high, lower low. In other words, I don't see a downtrend kicking back in right here. In the platinum market, today's high was 981.90. So the high right here is 982.10. It didn't get high enough to knock out that pattern. It's still got the lower highs, but now it's got higher lows also and oversold. I don't know what to do with it. If it drops, I look for the support between 952.5, 945. Any move over 982.10 sets up the possibility of challenging the 18-day average. Now, this low yesterday was 963.40. This low was 962.10. Do you see you've got the higher lows, lower highs? Not a pattern that, as a chartist, I'm enamored with in any manner. The market that got me thinking today, the office here was laughing because I came in and I said, guys, start looking at coffee, look at the palladium. I think the auto workers are going back, and they're going, what? Then another guy grabbed me and said, I think you're onto something. I said, yeah. If you're going to work, you're having a cup of coffee, and palladium is what? China's determined to get rid of the air pollution, so this is the catalytic converter for the cars, of course. And you can see how the market's lifting itself. Yes, it's reading tea leaves, some of this. You know, I'm guessing, is copper look good? This, don't know. I know the danger to us is this. We aren't open on Monday, and the rest of the world is. It's U.S. President's Day. It's not a worldwide holiday. So a lot of traders are going to be looking, what do they want to do over that 72-hour period where the world markets can go one way and you can't really protect yourself in some of these markets. Some you can. You do know the electronic futures will be open at certain hours during the holiday. That's true. Cash markets will not be. Dollar index, still bullish. Still higher lows, higher highs. It doesn't stop this rally. Okay, when it stops, it stops. You've got an embedded reading. I'm not bearish. The market has got higher lows, higher highs. I'm not bearish. Next stopping zone might be 99. And you know that your other currencies are getting hit. If you look at the euro, it's down, the Swissie's down, so it's dollar that's reigning supreme. You know, I talk about my market research for a reason. I put so much effort in it. Twice a day, Monday through Thursday, I'm writing 2 newsletters. One before 8 p.m. at night, Central Time, will be in, you'll get by email or you'll see it in our different products that we have. Because yes, we have our QT and all our other products, our software. I pop it in there as well as the email. I back up what I write at night with a morning subscriber video. Now I'm covering 40 charts. I typically record between 5:30 and 5:45 in the morning. That's Central Time. The reason is I want it in your hands, ideally before 7 p.m. Today, I think it was 6:07, you had it in the morning. Other days, it's a little later. I get up, I'm reading all over the world. Sometimes I'm tired, I wait, I need to wake up, but it's early, folks. And it's before the real volume starts coming into the futures. So you've got what I did then. Then at 11:30 in the morning, I have another report that goes out, because now I'm telling you not only what the economic data that came out in the morning is there any afternoon data, or what do I see in the market going on? The reports I write are by my design. They're not pages long. They're generally one sheet bringing you up at night for what the next day is, in the morning for what's going on, and then I go through the cycle with the commentary. I do some oral commentary as well. I put in the morning video. If you get the whole package, you see very quickly what's going on. If you haven't tried it, I'll give you a free trial to it. It's that simple. Just go to our website, sign up for it. If you've tried it, you can get it by going under the word research on our website. Sign up for it. Give yourself a try with it. But these are fun times now. The market's changing itself again. We've had the event of the coronavirus. I use the past tense. Sure, it can spread and get worse, but it hasn't. And the methodology, and I prepped you here, that they're measuring how many cases with change. Remember what I told you this week. If you don't believe that, go back and look at these videos. I said they're changing their methodology, and now we don't know what the baseline is. So what I'm focused on now is the amount of cases, mortality rate, to give an idea, at least from my sense of view, having been through the other 2 viruses, how bad is this? Flu is flu. We're used to it in America. A lot of the world isn't, and we know that. In the meantime, I'm Ira Epstein. You have a good day, and I'll see you tomorrow.